Welcome back. This is Traders Corner, and as always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, you've created a few charts to show us today to talk about whether or not we're in a new bull market. And it's interesting your use of the word new, because in fact, the market's been rallying for a good few years now.
Well, that's right. And I want to unpack this idea of the new bull market, because it's been discussed in the headline being thrown about as this new bull market, and the question is, well, is it new? I don't think it's new. The market's been going up for nearly 4 years now. So is it a new bull market, or is it actually a relatively mature bull market? I think maybe the concept of it being a new bull market is the fact that we're at new highs, and one of the definitions of a bull market is that it makes new highs, and that's something we've only seen fairly recently on the JSE. But I mean, the reality is it's been trending upwards and going higher for 4 years now, and it is getting mature. Not to say that there's not legs left in this, but is it really a new bull market? And I just want to unpack some of that.
I suppose, and before we get to the slides, it's interesting that it's just the sentiment seems to have changed more than anything else.
That's right. Yeah, we've come into 2013 with quite a bullish sentiment, and I've noticed there certainly is a lot of bullishness around which, and I think a lot of the uncertainty that was with us at the end of last year, around the fiscal cliff and Europe, would we see Europe heading into another recession and whatever. And I think a lot of those uncertainties have kind of been removed, and that I think is what is helping sentiment to be fairly positive at the moment.
Okay, well, you talk about the euro. You've got a chart of the euro dollar there. What does it indicate?
Yeah, I want to just show you this, because this euro dollar exchange rate is always quite an important and closely followed measure of risk sentiment. And the thinking being that generally a weaker dollar often coincides with stronger equity markets, and a stronger dollar coincides with weaker equity markets. And the relationship has kind of broken down a little bit over the last year, but I want to look at this nonetheless just to talk about it. What we've got over here is a very clear inverted head and shoulders pattern on the euro-dollar exchange rate. So you would typically take the height of that head structure and then you'd project it up to get your target, which in this case indicates a target of 143 for the euro-dollar exchange rate. And the critical level there, or the neckline of this inverted head and shoulders pattern, is 130. So I think provided we stay above 130 on euro-dollar, the bias would continue to favor a weaker US dollar this year and a stronger euro. So, and if that is the case, then you might argue that that tends to lend a hand to the concept of it being a bull market and remaining relatively firm going forward. Okay,
so that's one of the sort of key supportive elements. What about the S&P500 index, where it's trading at the moment?
Yeah, this is a very long-term chart. It goes back 15 years, which we don't often do on this show. But I want to put it up here just for illustrative purposes, to show you where we're at in terms of this overall bull market. I mean, you can see some significant bear markets and bull markets in that chart over the last 15 years. But the important level here that I think we need to be cognizant of in the next few months is 1550. You can see it was a major point of resistance at the top of the bull market at the end of 2000, and again in 2007. That was where the S&P 500 peaked once again. And we're currently trading at around about 1460, 1470 on the S&P 500. If we were to see a push up to 1550, where that resistance is, that would mean the market, or this market, would go another 6.5% higher from here. So I do think that there's likely to be a possible bit of magnetism towards that resistance line. But once we get there, we then need to reassess and see whether or not it runs into resistance or not.
Because as has happened before, if it gets there and doesn't manage to break through, it seems to be a rather negative indicator.
It could be, but I think for the time being, I'm fairly confident that we've still got upward momentum, and we might still go up and try and test that resistance level, and then we need to see after that what happens. I'm not going to be the prophet of doom and gloom and say that we're going to fail at that level and it's all going to fall in a heap, because I simply don't know. But I think it's important to acknowledge that this bull market is at a relatively mature stage at the moment. We are running up towards that big overhead resistance line, and we need to just be aware of this in the months ahead.
And of course on the Aussie, if you bring that chart up, I mean, there we have definitely set ourselves new records, so we're almost in uncharted territory here.
We are. I mean, our all-share index is looking very good. Obviously, the one thing we've got to take into consideration with this is the fact that we are quite sensitive to the rand. So a weaker rand, which we have seen over the last year or so, does lend itself to a stronger equity market. But if we look at this is the chart of our all-share index going back over the last 6 years or so. There's a very clear upward trend over there, which I've drawn in. And you can see our market climbing into the top right-hand corner of that page. That's a bull market. There's no question about that. That's bullish. But that trend line currently comes in at about 37,000 on our all-share index, which is about 3,000 points below where we're trading currently. And we could quite easily at some stage see a retracement back to this uptrend, just a nice healthy correction in the markets. A 3,000 point pullback from here would equate to about 7.5%, which would be pretty healthy in my mind. And it's not impossible that we see that. I mean, if we go back to the previous bull market from 2003 until 2008, there were many occasions where our market corrected 10% or thereabouts. And it can happen again, so we just need to be cognizant of that. We are quite overbought at the moment, but the momentum is up for the time being.
It's also interesting what the leadership or the composition of the top gainers in the all-share have been, because until now it's been the financials and the industrials, and that may be changing if we look at the last couple of days.
Exactly, and I think that's a key point that we want to make here, is that historically we've seen financials and industrials leading this market higher at the expense of the resources shares, which have been very weak and underperforming. But it does kind of seem as if we might be seeing a shift in the theme there, where the resources they do seem to offer value from a valuation basis. They're not expensive. And yet we've got our domestic stocks very expensive. The retailers have come under a lot of pressure over the last couple of days following some weak trading updates. And one wonders now, are we going to see a shift in the leadership of what drives this market in the next year? And looking at the next couple of charts, I've got some individual stock charts that we want to look at, just to try and ascertain where there might be some opportunities looking forward now, and some of those stocks are in the resources sector.
Well, in fact, the majority are 3 shares, and let's start off with the first, Anglo American, which I think you're looking to for a long-term bet, although today, of course, it's come under a bit of pressure following Susan Shabangu's comments with relating to the Amplatz restructuring. Yes,
that's right. Those comments have seen the stock come under a little bit of pressure, but I'm not too concerned about that. If we look at the structure of this chart overall, the thing is we are still in this big downtrend over there, as indicated by that overhead resistance line. But if we look at the shorter term area over the last 6 or 7 months thereabouts, what I quite like is that we've actually broken through an area of resistance there, which was at about 270 Rand a share on Anglo American. And what I see there now is the possibility that we could maybe consolidate and pull back a little bit. The share is pretty overbought, but if we were to see a consolidation in that area where I've put in the circle there, maybe a pull back to 270 Rand, that sort of area, which would be a retest of this prior resistance, and that would become support, then I would possibly look to start getting long of Anglo American at those levels. And I think there's a good chance that we'll see this share moving up to that overhead resistance line, the big overhead resistance, which comes in at about 310 Rand. So this is certainly one that I'm going to be watching in the week ahead.
What about Billiton, which is of course the other big diversified, which has had a much better year than Anglo American has?
It has. Billiton's been a much stronger performer over the last year. You can see a nice steady upward trend there going back to June of last year. If we have a look at that, if I just draw a short-term upward trend in there, you can see that there's an area of support which comes in at about 285 Rand to 288 Rand, that sort of area. If we saw Billiton pulling back to that area, I'd possibly look to get long of it. Also take a look at that stochastic on the top there. It's getting fairly oversold or getting towards oversold territory. So I think this is another stock. If you believe that the leadership can shift towards the resources, a stock like BHP Billiton is probably a good one to look at to get long of. And I'll be monitoring that support area very, very carefully in the week ahead as well.
Okay. The last in the resources basket is Grindrod. I'm quite happy that you have a fairly bullish view on this, because I've got Grindrod shares. What are you seeing there, Garth?
Good that you disclosed that. Yeah, I mean, is it a resource stock or is it a logistics stock? I think it's got a certain resource bent to it. There's no question about that, being involved in shipping and what have you, but they have diversified their business a lot over the years. But anyway, leaving that aside, let's look at this technical setup, which to me actually looks very, very bullish. Have a look there. Over the last 2 years, the stock has been tracking sideways in a channel with the lower end at about 12 Rand 50 and the upper end at 15 Rand 80.
Very frustrating.
Very frustrating if you're a longer term shareholder. What this over here is referred to is a cup and handle pattern. And don't laugh, but that is a technical analysis term. And when you see it break up, like we've seen over there where the circled area is, that is very bullish. It's broken up through that. You could call that like a neckline if you like. And what I see is you take the height of this pattern and you then project it up to get your target price. And in this case, it would project a target of about 19.50 Rand for Grindrod. So what I'd like to see possibly in the week or the weeks ahead is a consolidation of this recent strong breakout that we've seen, and any pullback towards 16 Rand a share I think would line up a very nice buying opportunity. It would be a retest of the top of that prior trading range, and it would also be a pullback to that shorter term upward trend that we've got over there. And to me, if we saw the stock pulling back into that area, that would certainly encourage me to get long of it. And this is one that I might even look to put on as a bit of a core position for the year ahead if we get a nice entry on it.
Okay, good news there for Grindrod shareholders. The two non-resource focused stocks, Bidvest and Aspen.
Yeah.
Let's start off with Bidvest.
Yeah, here's Bidvest. Now, this obviously is one of the stalwarts of the industrial sector, which has been a very strong sector of the market, and Bidvest has been a very strong stock within that sector. If we look at it, the trend is still very clearly upwards, as I've indicated there with that uptrend line. You can see the 50-day moving average, which is the orange line there pointing upwards. Now, the stock is currently consolidating, and it's pulling back towards this upward trend. There was also quite a significant level of previously overhead resistance, which now acts as support on a pullback. The stock is now pulling back towards 212 Rand, which is where that support comes in. And in fact, today we've noticed that there has been a little bit of buying interest around this 212 Rand area. So I think this is also certainly one to watch in the week ahead. If we can find support at 212, we hold the support offered by those trend lines and again by that 50-day moving average, then I think there's a possibility to get long of some Bidvest here as well.
Okay. And then the last of the 5 shares to watch, Aspen, which was one of the core holdings of the portfolio last year, and out of which you did very, very well indeed.
Yep.
Do you see a similar thing happening this year?
Again, it's still trending up, and the trend is your friend, as they say. So if we look at that, you can see the nice steady upward trend in place there. There's quite a strong area of support at about 160 Rand to 162 Rand over there, and the stock has been trading in that range today. So again, this is one that I'll be keeping an eye on. If it can hold that support and reverse up off that trend line, then I think that there's a possibility to look to buy some Aspen here as well. So these are 5 stocks that I think we're going to keep an eye on in the week ahead. I'm not doing any new trades this week, but these are certainly stocks that are on my watch list or on the radar screen to possibly do something with in the week ahead.
I mean, all things being equal, do you think a couple of these stocks could become core holdings in the portfolio? And is that what you'd like to do? Because it's kind of what we played around with last year, was having a couple of key stocks and then sort of trading in and out of other shares.
Yeah, absolutely. And remember, one of my goals for this year is to try and hold on a bit longer to the winners. And if I look at stocks, like I think Anglo American there actually looks like a nice setup if we can get a good entry on it. And I think the same can be said of Grindrod. So I'd like to try and time my entry well on those trades, and then maybe look to pick them up and hold them for a couple of months, or even maybe into the latter half of the year. We'll see how things go. But try and run the profits and try and hold on to the winners. Last year we did well, but we did leave money on the table by selling too soon. And it's one of my personal goals this year to try and actually get better at selling and to try and run the winners a bit more than what we did last year.
Okay, guys, so no open trades as yet for the portfolio, so I guess we're still starting needle at 0, or 250,000.
Yeah, we've still got our 250,000 Rand cash pile waiting to deploy.
Waiting to be plundered.
And yeah, we're waiting to use it. And as I said, I've identified a couple of potential charts this week that I will be watching in the week ahead, and we might certainly look to enact some of these trades in the week ahead.
Okay. Then to end off with upcoming courses, you've got one on the 19th of January. As you say, it's fully booked, but still places for the 2nd. Yeah,
this Saturday is fully booked. I'm training again in Johannesburg on the 2nd of February. So anyone that's interested in attending this course can email me, garth@traderscorner.co.za, and I'll send you the information. Or you can also get hold of me on Twitter or on Facebook as well.
Okay, great. Garth, we'll leave it there. Thanks always for joining us on the show. That's Garth McKenzie, the founder and editor of Traders Corner.